if you're in one of those crazy sectors like with AI or with China or with crypto or marijuana, that can in and of itself can be enough for me to buy a stock, even if the chart is in a horrible, awful, disgusting downtrend.
Whoa, like that's crazy to me.
We built this app called Askedgar, which is basically like SEC filings with AI. And one of the things we'll do, it'll flag things about the financial condition. So like, are they running out of cash? Do they need to raise soon? Do they have any debt coming due soon?
Swinging small caps is very, very dangerous.
That's another thing too when you're swinging, especially small caps. You really want to be aware of anything positive or negative that could come out.
Let's say you do your little scan, you go through your process, you see a stock, it hits your radar because it makes a big move, but you don't find anything, negative or positive. What do? Welcome back to the show, everyone. Today is going to be a great day because I got my friend and trader, JJ. He's been trading for 8 years. And if you don't know who he is, you need to go to watch the previous episode I did with him where we talk about his whole backstory. Today, though, we're going to be focusing on one of his recent trades, and he's going to analyze how he found the trade, why he traded it, and go into details so all of you can take something home. So if you're listening on the podcast, check out the YouTube channel so you can watch, because there's going to be a shared screen as well. So JJ, welcome to the show, brother.
Thanks, man. Happy to be here.
Absolutely, man. Absolutely. I love bringing different types of traders out, especially when it comes to sharing strategies, because we all trade different. So it's awesome, man. So you know what? Take it away. Let us know. Take us to school.
Yeah, sure. I mean, I guess what I can do is I'll talk about what I look for in a trade, particularly a swing trade, and then I can show a specific example. It's just one slide. This is my grand presentation right here. But I mean, it's really simple. There's two main things I look for. So it's technicals, like the chart setup, and then some sort of a catalyst. So starting with the technicals, I day trade as well. I make most of my money in swing trading though. But day trading is often how I find ideas, because what I'm looking for is a stock that made like an initial move and then it's still hanging around, ideally day 3 or beyond. So it's not one of those gaps up, gives back everything, and then it's done for us. So I want it to still be kind of hanging around. And then the catalyst. So catalyst, I'm looking for either something that they're potentially going to announce some sort of news. Maybe they indicate in a filing or in a news article that they're going to announce something. Maybe they're doing a presentation. Maybe they specifically say we're going to announce the approval of something or whatever it is. A catalyst can also be just a hot sector. So that's enough to warrant basically a catalyst. So if you're in one of those crazy sectors like with AI or with China or with crypto or marijuana, that can in and of itself can be enough for me to buy a stock, even if the chart is in a horrible, awful, disgusting downtrend, but we just enter in one of these just insane cycles where everything's running. My other, I guess you could call it a strategy, which is close your eyes and buy anything that's in that sector, is another way I'll play these, but we'll just focus on the multi-day movers for this. And then, I mean, really anything else that would support a bull or bear thesis if I was swinging short. I'm mostly swinging long though, because generally what I'm looking for is traders and investors to be buying and wanting to buy and hold this stock. I don't want people that are getting in it for like a short term that are going to be shaken out by any kind of move, which is why catalysts are great, because if there is something that's potentially going to be announced, you have more traders or investors that are likely to buy and just hang on to it, which causes that kind of drift up because people aren't selling, they're buying and they're holding and they're waiting for that catalyst. So going into this trade here, so ICU, this is one of those. I'm going to go over my trade in this area right here. It's funny, I actually traded it back here too, and it was the same exact setup where, and just to reference again the technicals, it made a move and it's still hanging around, right? It's still hanging around. Okay. It's consolidating. This is the type of pattern that
Can you let us know what time frame you're in, just for the audience here?
Sorry, yeah, this is a daily chart of ICU, so it's a medical device company. But yeah, basically back here they're teasing that they were going to be announcing a catalyst. So I got long in here. I even shorted the news, but I'm going to focus on this part, which is they did it again. So basically, how I came across this was I was actually short here anticipating a reverse split. And then they came out with news saying that they were going to postpone it. So I covered, and I can't remember how it got on radar again, but I saw that they mentioned that they were going to announce some approval some FDA approval. I think that they said December to January. Right in here, I actually tweeted about this. And so it was right in here when I started to get long. So it kind of had those two things I like. So it's the technicals, it's this kind of like daily breakout, and then it had the catalyst. So I can show you well how I found the catalyst and also just where I got in. So I actually tweeted about it. So my entries are right in here. This is that um, period around January where I started getting in long.
Yep.
And then so we built this app called Askedgar, which is it's basically for those of you that use like BAM SEC. It's basically like SEC filings with AI. And one of the things we'll do, I'll jump into the UI and show you where this came from, but we flag certain things like upcoming dates or timelines, votes, catalysts. There's a few categories that we basically will scan the filings and pull out these things because these are things. I built this with a lot with like my trading style in mind, which is I trade around catalysts. So as you can see here, they're preparing and they're expecting approval order from the FDA between December and January. So I saw that in the app. I'll just show you where that is in the app. So this is Askedgar here. As you can see, again, for those of you that use BAMSEC, it's pretty similar. It's got the filing tables here. We even added summaries too, just to make things easier. So there's like, they're kind of like cliff notes almost, where these will also flag key catalysts, key dates, and timelines. So it's really easy to just, if something comes out, you can spot if they have a catalyst or not. So going into the insights here. So this is what it looks like. We still need to do some UI work. This is still new, but basically it'll flag things about the financial condition. So like, are they running out of cash? Do they need to raise soon? Do they have any debt coming due soon? If they had an earnings call, we'll have the highlights from those as well. This is a little bit more useful when you're trading big caps or mid caps because they are more likely to have earnings call than these small cap companies. And then from the news and 8Ks, we'll flag a lot of things. And like I mentioned, things I pay attention to are upcoming dates, timelines, catalysts, and things like that. As you can see here, they have a conference call scheduled for April 17th because they messed up with their financials. So that's another thing too when you're swinging, especially small caps, is like you don't want to be caught by surprise on things like this, So you really want to be aware of anything positive or negative that could come out. So even when I was trading this, I was aware of like their whole delisting problems, but I knew when that was going to become an issue for them. So it's just good to know these things when you are swinging a stock.
You got this information, and then how did you kind of like plan out the trade itself? Like, what were you thinking? You find this. You said there's a catalyst, and then you found out there's a reason why it's holding up. It has this initial move. It's holding up. There's a catalyst behind it, and then you dig in the filings. And what are you looking for specifically? You said you're looking for upcoming dates, any red flags so you're aware, and then what happens next?
So that's it. I mean, then in that case, I set I guess sell targets, but it's more of like a time-based target, right? Because I'm going to keep holding until that catalyst comes out because what I'm hoping for is a gap up on that date. Now, I did sell, I guess, along the way because it made a move and it didn't even announce the news yet. I decided to sell some, but then I was getting long again more in here. But yeah, I'm basically just, as long as it's holding trend, I'm just going to keep holding and even like continue adding to the position because the fact that they have this news kind of looming and about to come out, it gives you a lot more confidence to just hold on to it, and even like, so I actually got much bigger in here because they actually, there was a big shakeout here and it got bought right back up, so it's like kind of like a good, like that was like kind of a tell, that's like they are announcing news. People are obviously buying every single dip, but so these trades are good, not just on the long side, but on the short side. It's huge because all the buyers, the longs like me, we're all going to be selling in that news. Once the news comes out, there's no reason to hold it anymore. So then you have all these longs that are just rushing for the exits when the news comes out. So I tweeted about that as well, where I'll show you my sells and my shorts. So these sells, they're a little early, actually sold before the gap because the other thing too is when it is moving up into the catalyst, you want to be ready to get out pretty quick because very often it doesn't move beyond that because of what I just said, because people are looking to unload into that catalyst. So I was out like pretty much as soon as it gapped up. I knew people were going to be selling into it, so I did the same. Um, and then in another account, I got short as well. Um, and actually, so another thing too is on the downside, there was like an impending negative catalyst. So what was it? It was here's another screenshot of insights here. So you see here Nasdaq's hearing panel scheduled for March 12th. So this was on February 22nd. So I was like, okay, well, I can actually hold this short because typically when stocks are going into a reverse split, they sell off pretty hard. So I was actually short and holding into that because of this, which gave me the confidence to hold it short. Which the funny thing is, they again.
What does that say exactly? Because I can't read it from my perspective.
So it says a Nasdaq's hearing panel is scheduled for March 12th regarding the company's non-compliance with the Nasdaq's continued listing requirements. So that had to do with them being below $1 per share. So that was the other thing I mentioned was, if they can't keep it over $1, it's just going to sell off hard, and it did came back a little bit. I'm actually short again because they're gonna do the reverse split. I mean, it's inevitable, unless somehow they're able to hold it over $1 for I think like 10 consecutive days. So very, very unlikely. But yeah, I mean, I was waiting for this. I was telling my chat, this was 2 days before. This is February 20th. ICU going to be an epic sell the news event when it comes out. So that was when it made it the move on this day. And I was just like, this is setting up, like, honestly, you don't get this kind of setup that many times a year. I mean, this is the type of trade where you can make, half your year on, because it's something that you're completely prepared for, so yeah, that's kind of
really, like what a cool, interesting way. Like, go ahead.
Yeah, so I mean, that's pretty much it. It's basically buying into the catalyst and then selling the news, shorting after the catalyst. And there's a lot of examples you'll see of these types of charts. So ICU, I traded one NVOS. This was a similar type of setup, right? You got this. They also had a catalyst. They also had a reverse split. TTOO was another one.
Hey, we wouldn't be able to do these face-to-face interviews if it wasn't for our sponsor, Cobra Trading. So if you can just give them a few seconds of your time, we'd really appreciate it. Cobra Trading is the go-to broker for day traders and short sellers. And I'm not the only one saying this. In fact, Benzinga awarded Cobra Trading as the go-to broker for short selling. They have a heavy focus on direct market access order routing, so you have the fastest execution. They have some of the best locate prices and availability. They also have amazing customer service. I've experienced many different brokers, and it's why I use them every single day and why I'm proud to have them as our sponsor. Sign up now by clicking the Be the Trader referral link below and earn 1 free month of software with Cobra and 25% off all commissions. Now let's get back to the show. So you're basically positioning yourself with the technicals in mind.
Yeah.
With risk in mind and stop off technicals. And then you are holding the trade as long as your catalyst is still in play.
Correct.
And as long as the technicals don't break down.
Right. Yeah.
Would it be safe to say you mostly do this on small caps?
Yeah, mainly small caps. Sometimes I guess you could say with some of the bigger biotech companies, I guess you could call them. I mean, they're still like barely over $1 billion. So yeah, I'd say mostly small caps. Yeah.
And that's interesting to me because, when I found out that you did trade small caps and you swing them, I was like, whoa, like that's crazy to me because like I swing big caps and it's just way easy for me to sleep at night.
Yeah.
But I don't do fundamentals. And so like you do, and the fact that you have this, this process to get you to be able to swing these is very interesting because there might be other traders out there who have a small account and want to try only small caps only, which makes sense, and they go ahead and give it a shot and they can do swinging because they have to work. So, but swinging small caps is very, very dangerous. So that's why I love how you go through this process of finding, the reason why it's, going to move and why it still could be dangerous and when it could be dangerous.
Yeah.
Now, if you don't find this information, let's say you do your little scan, you go through your process, you see a stock, it hits your radar because it makes a big move. It has a catalyst. And so you're like, okay, great. There's a catalyst that made this move happen. Now you see that it's holding up for a couple of days. So you're like, what's going on? I'm going to go do my research, but you don't find anything negative or positive. What do you do?
So if the technical setup is good,
And it's a small
if
cap.
it's a small cap, I will long it if the technical, if it's a nice technical like daily consolidation breakout. Um, but the market has to have some sort of strength to it. If the market is super weak, if there's like nothing running, then I'm just because I made this mistake before, like you might get a little bit of a breakout, but it doesn't go anywhere and it fails, and you can't. That's just not good risk reward, because the thing that makes this strategy work, because it's not like I'm right less than half the time on these plays. I mean, I would say I'm probably right
Yep.
maybe a third of the time, to be honest. um, but what makes them work is the risk reward, right? Because like here, I can't remember exactly what I was risking, but I think I was risking like 10 cents, and I ended up having a lot of my sells like in the 150s. So that's like 90 cents a share, and I'm risking 10 cents. So
That's great.
the thing is, if this was a weaker market, and this comes up and then it breaks out and it fails, or even they release the news and it fails, you do want to really keep in mind like what the strength of the market, has a lot to do with whether or not these plays will be successful.
Like the sector momentum or like the
Right.
small cap
Yeah, like for example,
momentum.
like you will have ideally, if like, so this is a medical device company. Ideally, there's at least one or two other stocks that had made some nice moves in that sector, because what that'll do is that'll give like longs more conviction to buy and hold, and not only that, when the news comes out, it'll pack more of a punch if there's already been runners, right? Because they'll be buying into those gaps. If nothing's been gapping and nothing's been moving, people aren't going to buy the news, which is what you want to happen.
So let's say it is everything picture perfect, but going back to that scenario, you don't have anything on your insights, like you're looking through this filings, but you do find just one negative thing coming in the future. Like it this says like a month out. It's like an offering
Mm.
that they can do, whatever, something like that. Does that prevent you from taking the trade, or will you still take it knowing that there's something lingering?
It depends on how imminent it is. Like if it's something like where they could drop the offering like any time, then I wouldn't take it.
Would that also apply if it's a great setup and everything? Like you do have positive news coming, but then there's like a catalyst. I mean, an offering that can drop at any moment.
Yeah, I mean, if there's an offering that could drop at any moment, oftentimes I won't take it. No, unless there's
Okay,
something that indicated that it's not going to happen like right away. You know.
like it's like an offering that's locked until a certain date.
Yeah, or like maybe they they're capped by the amount they can raise from their shelf, which happens with small caps, where
Hmm.
if they're basically, if their public float is less than $75 million, they can only raise a third of their float value. So sometimes with these really small crap companies, their float value is like 5 million bucks or whatever, and say they
Hmm.
already raised $2 million, that means they can't raise anything. You know, so that's the other thing too, is it might look like they can raise, but if you do your homework, you can see like, okay, they actually can't raise anything, so there's no risk of that.
And that's why you're here explaining that, because I don't know anything about that side of the game, and that's very interesting right there what you just shared. So I really appreciate you sharing that, JJ, because I know there's other people right now who are like, "Oh, what was that? Let me write that down real quick. Let me rewind that because that was gold right there." So let me ask you, what is the one or two like reasons why you should try this out, or like maybe look into this type of trading style?
I mean, well, there's a couple reasons. Like, well, one, if you can't sit at your computer and day trade all morning, that's one. Because I could have got in on this. I mean, I could have got on this almost any of these days and still had a good risk reward trade, right? So it's not like I need to be sitting there for every single tick.
Mm.
And then the other is the risk reward. I mean, it's fantastic risk reward. So like if you have a small account, it's really easy to just risk a small amount for a potential, you know, big gain. It's a little bit more difficult to do that with day trading, in my opinion.
Now, and is there like one big warning you'd give anyone who is going to try something like this?
If you are longing, like obviously, like make sure that there's nothing potentially negative coming out. So especially if you're trading biotechs, be very careful if there's any like clinical trial data coming out. I have gotten hurt pretty badly where I didn't properly do my homework, and I was. Let me actually show you. I'll show you the chart. What was it? Okay, this one. It's funny. So this one, I was long like right in here, I think. And then I was like, oh yeah, like it's like going up, going up, going up, and I wake up to this. I think I got out like
Oh snap! I can't see. Hold on.
oh
Let me
sorry.
move my. I can barely see it. 1 second. Okay, I can see it.
You see
Now
it?
go
Yeah, yeah,
ahead.
yeah. So
Jesus, wait a minute.
I was like in here and I was like still wasn't selling. I was just like, yeah, like I'm the man, I'm the man. And then like like woke up, they came out with some like negative trial stuff, and I think I was able to get out. I mean, because when it gaps down, there's it's really hard to get out. But I think it was like super low. It was like in the sixes almost. Like I got up pretty low. So you do have to be so this is so I would say specifically for biotechs. Just be very careful with biotechs. Um,
Would it be easier just to avoid them, or are there really good ones too that
well,
you don't
they
want to
always
avoid?
say when they're. I mean, it's really it's your own fault because they always say when they're going to be releasing data. Although
Hmm.
I take that back. There are times where they can surprise you. I mean, as with any stock, I mean, even if you trade like Tesla, if something were to happen, like if Elon Musk were to die or something, the stock would gap down a ton. There's nothing you can do about
Yeah.
that. So yeah, I mean, they can come out with. I'll just say that biotechs are a little bit more risky than others because of the fact that they're doing these trials where like they could fail or they could get some notice from the FDA of something bad, something negative, and it can gap down quite a bit. And that's particularly dangerous with biotechs as opposed to really a lot of other types of sectors that you don't have to deal with those types of risks. But they're also the
Well, look,
ones that have the catalyst and they're the ones that have the big moves because the thing about biotechs is that depending on what they're trying to do, I mean, with biotechs, they depending on what their drug they're developing, and there is potential for them to like break into a massive market. So there is huge upside with them, which is why you get investors
hmm.
buying and holding these types of stocks. Whereas with kind of like these crappy tech stocks, you don't get these multi-day moves that you see in like biotechs. Like with the COVID stocks and things you saw with that.
100%. But like you said, I mean, massive reward potential, but also massive disaster if you don't do your homework. So
Yeah.
do your homework. Do your homework. But look, JJ, I know people are going to have questions. They're going to want to learn more about what you do. Could you go ahead and share with them where they can find out more about you?
Yeah, so on Twitter, JMT415, and then come check out Askedgar.io. Yeah, to look for catalysts.
Well, thanks, guys, and y'all have a great day.